Hello everyone, welcome to our QFAA podcast interview series. Today we have our guest Xian. Xian Tan is our graduate class 2013. So today our topic is about macro research and also some of the interesting investment related topics in the macro world these days. Thank you, Xian.
Thank you for having
me. Coming up to be our guest today. First of all, maybe let us know a little bit more about you. Can you introduce your background, where you grew up, and the path before UST, path after UST?
From Malaysia. I grew up in Malaysia, spent my entire life in Malaysia. And by the age of 19, I didn't know what to do. And I actually stumbled upon HKUST. I was like, I didn't know what to do. I didn't know whether I wanted to go to university or not. But then I went to an education fair, and then UST was there. And then I saw UST, thought it was interesting, and applied to this university. And here I am, and came over to Hong Kong, coming from Kuala Lumpur. Was a city, but it wasn't a big city. So then came over to Hong Kong. It was a mega city, right?
Yeah.
The gap is huge, and I remember I landed in Hong Kong, taking the bus to HUST, seeing all the skyscrapers, like, wow, it was an eye-opening moment.
Sure.
And then studied in UST, and then applied to my job, and then got my job, kind of also by luck. And then since then, I've been with the same job, doing the same thing, covering the US.
Okay. So a bit of background, Xian's work is around macro research as a research analyst or strategist for US market across or as a class for US. Okay. That's very interesting. So first of all, before we dive into some of the investment topic, can you help maybe our readers to understand what is general framework of doing macro research?
I said there's no framework.
No,
I'll describe it this way.
Sure.
Macro research, to me, is unlike coverage in specific asset class where you may have some sort of framework like DCF for equities, and then for bonds, there may be some other framework. But for macro, I would say it's more of a understanding of human behavior.
Sure.
And that's from very top level. Of course, there are a lot of other things like you need to know gross domestic product, you need to know the breakdown of gross domestic product. And one very basic level framework is you need to understand what drives growth. Growth and inflation.
Okay.
These are the two very important things in macro where it drives markets. So within growth, there are a lot of factors that affect growth. Within inflation, there are a lot of factors that affect inflation. I would say from very basic level, growth and inflation are very important.
Sure.
But there are a lot of other things.
Policy.
Yeah. Policies, monetary policy, fiscal policies, even just simply how people think about certain countries, that would affect money flowing from one country to the other.
Okay. And then how does the research framework divide between quantitative and qualitative aspects?
Yeah, the way I think about it is within macro research, there is you can either go very quantitative or very qualitative. And the idea is that within very quantitative sort of approach, you sort of assumes that things will not change going forward. So from now to the next point, things will not change. And you bet on revert to mean type of
mean reversion.
Mean reversion type of situation. And then there is the other end, is qualitative type, which is more towards regime change.
Sure.
So things that we have not seen before, this is first time that it happens, which is why I bring back to the question, your first question just now, asking me about framework, is the reason why I say there isn't a framework is because you have certain situation you would need to assume that revert to mean type of situation would happen.
Sure.
In certain situation, there's going to be regime change.
Sure.
And both of these could happen. So you just need to be prepared for either of this situation happening.
Okay. So quantitative side, would you say that you need to build a model to track the growth and inflation and their breakdown elements to like find details? Is that the main type of quantitative work?
The way I think about it, the way I've been approaching it is that, so on the quantitative side is understanding what factor affects macro.
Sure.
So for example, in the US, there's, as I mentioned, there's now GDP and inflation.
Sure.
So which factor tends to affect GDP, which factor tends to affect inflation, and which factor tend not to affect. For example, I can give an example like consumption. So there's a lot of talks about consumption, whether it's affected by confidence or affected by just having money in the pocket.
Sure.
So what I found in my quantitative work is that, yes, confidence is important, but a lot of time if you put money in people's pocket, people are going to start spending. So a very good example was the COVID experience in 2020.
Okay. Got it. And qualitative wise, how do you do qualitative research?
So my approach is I sort of use Soros's approach or adapted Soros's approach of reflexivity to understand perception leading to effects and going back to perception.
Sure.
So a lot of the time is understanding the continuation of the trend.
Sure.
So for example, what's happening now is there's this talk about the end of US exceptionalism. Is it going to continue or not? So the way I approach it is that, okay, so there are a series of events that reinforce this thinking of the end of US exceptionalism. Do we get the next big event that's going to reinforce it or break this cycle of the trend?
I see.
So it's constantly looking for big events that either reinforce the trend or break the trend.
Okay. Very interesting. I think we'll go back to this US exceptionalism later part. Okay. How do you think maybe doing macro research different from the other types of investment research, like stock research, fixed income research? Maybe you don't have experience in those areas, but generally, from your comparison,
I would say macro research it's more on broader scope than in depth. I haven't done really equities and fixed income research before, but then my impression is that fixed income and equity research is more in depth.
Sure.
That when you look into a company, you know everything about the company. You know, look at the industry, you know everything about the industry. But into the macro research, we sort of like jack of all trades.
I see.
We try to go everywhere that there could be some interesting ideas or trade that could be made by macro investors. Then that's what we go. So I would say
depth versus breadth.
Yes.
Okay.
Exactly.
Cool. Okay. Got it. And what kind of personality do you think is suitable to do this job?
Curiosity. People with a lot of curiosity. Because as I said just now, it's very broad.
Sure.
You can go to anything. Like recently, I was looking at education because of Trump's attack on education, and I look into education.
Sure.
So it requires a lot of curiosity to different topics, and a lot of topics are topics that you're not going to be familiar with, and you just need to go in there, try to understand as much as you can, and see how it affects certain trends you're betting on or certain ideas that you have. I would say, with curiosity, you also need to be flexible, because again, going back to looking at different topics at different times, and looking at different topics, you may need a different approach. So you need to be more flexible, not fixating your mind towards one approach of doing things, but in certain other things, it may require a certain different approach. So as a curiosity, flexible is it.
Okay. That's great. I mean, it looks like a very important trait. Yeah. How is your daily job routine look like as a macro research strategist? Yeah.
So I get up in the morning, read up news. There's a lot of news. It's not just my area of coverage, which cover the US. Of course, I'm going to spend more time looking at the US, but I'm just going to scan through news everywhere in the world because everything, as I said just now, everything has some impact on my area of coverage. So scan through news, spend most of the time doing that. And then I would start thinking about whether or not to write up about certain topics.
Sure.
So if certain topics is important to clients, certain news is important to clients, then I will write it up or decide not to write it up. And then there are certain days where I need to meet clients, do webinars, do seminars. So there's this research part and there's also communication part.
Sure.
So I would say at the beginning of my career, I spent more time on research part, but then over time, I spent more time on communicating clients, client interaction, because sometimes clients look to you to tell them what do you think about this news. Then you have to say something about the news.
I see. Okay, very good. I think basically that's a very good overview on these macro research job nature. Next, maybe we touch on some of the topics which are more timely for now. I think one of your top trend or like top topic now is this U.S. End of U.S. exceptionalism, right? I think, of course, I think this topic has appeared in the market news almost like on a daily basis. First of all, do you really believe this will be this is really happening in the next 5 years or 10 years?
Of course, I cannot say with certainty. There are a lot of things happening. The one thing in macro is you got to be humble and
and
look at what's happening and flexible. Yes, but it is something that I've been thinking about a lot, especially since the beginning of the year. So part of the reason why I've been thinking about it a lot is that the starting point, US dollar and US assets are overvalued. So there's this tendency for people to want to look elsewhere for better return, better yield. So it needs a trigger for it to happen. And since the beginning of the year, I feel like the Trump administration has given us a lot of reasons to think that it could happen. Thinking about things like threatening to confiscate Colombia's asset over deportation, tariff, which was a big one. And then there was this education attack, which is also another thing that could have long-term implication on US growth. And also the rest of the world, as a result of tariff, stimulating the economy. For example, like Germany and China doing most fiscal stimulus to support the economy. So there are all these factors that, events that contributes to the narrative of the end of US exceptionalism. And I think one important thing is looking at the news and so speaking to people, there's this tendency for people to start looking for opportunity outside the US, especially with the institutional funds,
of course,
which I'm starting to see quite a bit of them talking about it. So going forward, we need, for this trend to continue, there needs to be basically more events that reinforce this thinking about the end of US exceptionalism. So the next thing I'm watching is the tax bill, which has the potential of either reinforcing this thinking of end of US exceptionalism or break the cycle of this narrative of the end of US exceptionalism.
So if the tax bill got passed, what's the impact to this narrative?
There are two ways of thinking about this tax bill. One is it delivers big deficit spending, which is positive for economic growth. And then, because it's positive for economic growth, it's positive for equities, positive for US dollar because of relative growth improvement in the US relative to the rest of the world. US Treasury may sell off a little bit, but not a big deal. That's one way of thinking about it. And that has been a conventional way of thinking about it for a very long time in the US, because people just want to put their money in the US.
Yes.
The other way to think about it is that this deficit spending, on top of that, within this tax bill, there are two provisions that I won't go into detail, but then potentially, or giving the impression of capital control. So the non-normal market reaction could be that there's a big deficit spending, there's more worry about Treasury's ability to continue to meet debt payment, interest
Sure.
payment, and foreign investors pull out. And adding to that, you have these provisions that give the impression of capital control, which is going to
the money cannot go outside of the US.
go out and also go in.
Okay.
So that could scare investor away. And if that happens, then you get a situation similar to April 2nd when tariff was announced. You have equity sell-off, you have bond sell-off, and US dollar sell-off.
Okay, so that's the maybe like a contrarian type of
Or the scary situation.
situation.
Yes.
Okay.
And if that happens, that has the potential of reinforcing the end of US exceptionalism narrative.
Beside the tax bill, how do you think the tariff war will end up? Apparently, we are still in this 90-day negotiation period. You hear some positive, negative development day in and day out.
Yeah.
But what would be the end game? Say end of this year, how does this tariff regime argument look like in your opinion?
Yeah, I will first start off by saying that we never know. But then I'll give a longer term perspective, which I heard from a client, which is very interesting. That China's economy can survive in war. That's what he said. China's economy can survive in war, and the U.S. economy thrive in peacetime.
Okay.
And the way to think about it is that as China grow, the U.S. feels threatened. A lot of the reason why they're doing this tariff is because of national security, which is very obvious from people in the Trump administration. So China is going to continue to grow. It's going to continue to appear to be like a threat to the U.S. Now the U.S. is trying to do a lot of the similar things that China has done to the economy.
Industrial policy.
But yes, industrial policy. There's no like a explicit industrial policies, but a lot of things rebuild manufacturing in the U.S. But the people, the labor force, is not trained towards that.
Sure.
So as a result, as the U.S. try to do a lot of things that China is doing, and because the labor force is not trained for it, there's going to be a skill mismatch in the economy.
Sure.
And the risk is that causes productivity to start deteriorating in the U.S. because you're asking very smart people in Google to do supply chain stuff, like build stuff. How are you going to get people to do that, right? So then, so the risk is that if this continues, productivity in the U.S. starts to deteriorate as a result of this skill mismatch.
Sure.
And that could give China an upper hand in this situation.
Okay. I see. So how do you advise your client or investors to adjust their investment portfolio in this kind of new, highly geopolitical, uncertain era? Yeah.
So there are a lot of things that people can do, but then one thing that I've been thinking about a lot is to be more inward-looking. So like geopolitical tension is between countries, but if you look for investment within your own country, then and businesses that primarily do domestic businesses, then you are less affected by geopolitical tension. But then of course there are a lot of other considerations, like if you want to be more inward-looking, is there more capital? Is there capital available in the country?
Exactly, right.
If there is capital in the country and you see more of those capital become more inward-looking, then the economy can thrive. Because there are a lot of Asian economy for a very long period of time. They build up a lot of savings. A lot of savings are invested in the US. But what if this money starts moving back to these Asian countries?
Sure.
And you want to be prepared for it because some of the funds, some of the big institutional funds are talking about bringing money back to domestic economy. And if that happens, you want to be in front of them, right? So that's how I would think about it. If you want to avoid geopolitical tension, look inward.
But for I think most investors, a lot of the asset, the easiest available one is in the US, right? Equity and maybe the fixed income market. If you need to look inward, in fact, So maybe every investor has to go back to their home country just to do a bit more investment there.
Yeah.
Is that the best, most direct? Because if you ask me, okay, as maybe some Asian investors, they need to look in Latin America, Europe. That's actually quite difficult, right? Not that easy.
Yeah. I wouldn't say completely look within just your economy. So, for example, let's say you're a Latin America country, you don't really have to just look into your own country, but you can look into your neighboring country. The reason why I say this is that part of the thing that have contributed to the end of U.S. exceptionalism narrative is that the Trump administration have been trying to fold back the security umbrella globally, especially in Europe. You can see from Trump and J.D. Vance's speech that they're talking a lot about not giving so much support to Europe in the war with Russia, the Russian-Ukraine war, and it's also folding back a lot of its security umbrella over to, let's say, Japan. And part of the reason why they're doing that is because the cost of protecting everyone has gone up because of how warfare has evolved. Now, when they fall back, they're not just going to fall back to their own country, right? They are neighboring countries. So it seems that the Trump administration is folding back to the Americas.
Sure.
So, as investors within that region, maybe what those investors can think about is to invest within the region. So at least within that region, you have America as
a region.
Yes, you have the security umbrella from the U.S. The risk of geopolitical tension between U.S. and EU or within the region is smaller than with the rest of the world. So look within the region. So for example, with Asia, then it's surrounding China.
Okay. Fair point. Okay. So usually I ask this question at the end, but then since this question is more related to investment, how do you invest your personal wealth around this topic?
Well, we wouldn't go to specific about what I invest, but then
high level direction.
Yeah. So there are a couple of things I look into. So first is the end of U.S. exceptionalism.
Sure.
So one thing is to avoid U.S. assets, which is very simple.
Avoid U.S. assets.
Yes. So
do you sell your U.S. stocks or?
Yeah.
Okay.
Yeah, I do.
Wow. Okay.
Avoid U.S. assets, and then going to the next topic.
Yes.
So after you leave the U.S., where do you go?
Yeah.
So another key theme of mine is the world entered a multipolar world. Where in the past, where we have the U.S. as the only anchor, and everyone sort of gravitate towards the U.S. U.S. as the anchor, we had a unipolar world. If we go into a multipolar world, where you have different regions anchored by different superpower within the region, then to trade within region, you need some sort of neutral asset. And one neutral asset I can think of is gold.
Gold, okay.
Yeah. And then the third thing that I've been thinking about a lot is China's aging population or declining population. And China is still a manufacturing powerhouse, but with lack of people, with population aging and number of people in the country falling, then the risk is that they're not able to produce so much. So how are you going to produce more? So one book that I've been reading is Richard Ku's Pursuit Economy book, which I highly recommend. That talked about how Japan took over the whole manufacturing, became the manufacturing superpower after the US, and how China became the manufacturing superpower. So the thing I think about is where's next. Of course, I haven't come to a very strong conclusion yet, but I'm pretty positive on Southeast Asia.
Southeast Asia.
Yeah.
So gold, Southeast Asia. How do you invest in China, US, China, Europe, or Japan?
To be honest, not really.
Wow. Okay. So mostly gold and Southeast Asia, but of course, I think Southeast Asia is your home.
Yes.
So
part of it is because I know that place better. Yeah.
Okay. Within Southeast Asia, which countries, or you just do it across the board?
Well, I'm personally very positive on Malaysia, but that's a separate story. Part of the reason is because in Malaysia there's population growth. Malaysia, of all the Southeast Asian country, Malaysia is, other than Singapore, which does a completely different.
Sure.
It is a completely different economic model, which Malaysia can never do. Malaysia is the only country in Southeast Asia that have a population that speaks Mandarin.
Sure.
And really understand Chinese culture.
Sure.
So over time, I've seen a lot of businesses coming to Malaysia, setting up Chinese businesses coming to Malaysia, setting up businesses, and actually helping domestic businesses to become more productive.
Sure.
So there's this concern about Southeast Asia being less productive than China, which I think is valid concern. But I've seen a few examples where business came in, make some tweaks. So they invest in a business in Malaysia, make some tweaks to the business, and as a result, that business become a lot more productive. So it's not so much about those people being less productive, but it is the know-how, right? China has the know-how.
Sure.
They come in, make people more productive, and that could potentially stimulate growth in the region or even in Malaysia and the region.
I see. So mostly equity then, Malaysian or Southeast Asian equity.
Well, you could talk about properties,
okay.
Southeast equities.
Okay. Very good. I think it's actually a new angle. If people have interest on investing in Southeast Asia, I think they should come to you.
I'm not an expert. But you asked about personal wealth, so that's outside of my.
No, that's actually where you put your conviction is. I usually trust where they put their money in than where their mouth speaks.
That's one way of looking at it.
Excellent. I think very interesting. Towards the last part of this interview, we ask some personal questions. First of all, just out of your memory, what would be the most memorable thing in your HKUST Quantify study?
It's getting into QF. I still remember, as I said, stumble upon everything by luck. Coming to Hong Kong is by luck. Getting into QF is also by luck. I didn't know about anything. My grades were pretty good in my first year, so that's why. And in my first year, actually, I wasn't in QF. I was in the BBA program.
Oh, so you transfer?
Yeah, I was a transfer in. And back then, I didn't even know what QF was. It was just that my grade was good, and then one of my Hong Kong friend came to me and say, why don't you try applying to QF?
Sure.
And I was like, all right, I'll just do it. As in my grades were pretty good. And as you recall, going to interview, I think I cannot verify this, but I think I was the last one to be interviewed.
Okay.
So
who was the interviewer?
I think it was Angela.
Angela.
Yeah.
She still interviewed QF at that time?
Back then she was the one. I think so, but my memory is fuzzy. But then that's very memorable to me because I didn't expect to get into QF.
I see.
So I think it has been a privilege, and then my meeting friends in QF has been an amazing experience.
Got it.
So I think that's one of my most memorable moments.
How did it feel being non-Hong Kong, but actually you speak Cantonese. I think it's not very fair to this question.
Oh, I'm still a foreigner.
How does it feel being a foreigner in the community where they're 80% Hong Kong?
I would say I learned a lot from my peers in Hong Kong. So one thing about Hong Kong is that people are highly tapped to whatever is happening around the world, and financial news especially. And people knew exactly what they were going to do or what they wanted to do when they were in university. And like me, came in and didn't even know what investment banking was. I didn't even know what the difference between investment banking and commercial banking was.
I didn't know either.
So and I just came in and I learned a lot from my peers, to be honest. Just understanding the industry and then got me interested in the industry and ending up in the industry. So I learned a lot from my friends.
Okay. So there's no a big problem.
No.
Being a minority.
No. Part of the reason is because I speak Cantonese. So.
Okay. So this year is our first year of this Alumni Association QFAA. Apparently we are still very new. Do you have any suggestions for how we can do more or do better?
I think this podcast, this is amazing. I think we should keep doing it. You should keep doing it. Thank you for your time doing this. But then one thing I would like to know more is what alumni are doing. And what I would love to have more discussion about markets, news, with whoever interested, whoever listening to this,
Sure.
can reach out to me and we can talk about markets. Because I think we have alumni, we alumni has passed this point of looking for jobs.
Definitely,
so
yes.
We're not no longer looking for jobs. What we are looking for is that network to be able to find people
Share common interests.
Share common interests, talk about different topics. So I think this alumni association is a good start. Podcast.
So we
is a
should
good
create
start.
some kind of interest group in
Yeah,
a sense
could
where
be one.
we can group people of similar interests together
Yeah,
so
yeah.
that they
I
can
will be
share
interested to
or
join this.
collaborate, right?
Yeah.
Okay. Yeah, we need to think about how to do this, but this is, yes, one of the direction we try to
I look
try
forward
to do.
to it.
How about overseas alumni? I mean, do you think over time, I think the alumni also spread around the world? Is there anything, I don't know, how about Southeast Asia? Are there any alumni in Southeast Asia?
I
I
don't
think
know.
there are some Singapore. Actually.
There are quite a few in Singapore.
Yeah.
Yes, Singapore is Southeast Asia. Yes, there are quite a few in Singapore. But I know quite a few who are still in Hong Kong. I mean, suggestion for people abroad, I would say reach out to you guys.
Yes.
Because I think once you're away from Hong Kong, then you're away from Hong Kong, away from UST, away from this community. Over time, it's kind of cannot remember that you belong to this community. So I would say reach out to you guys, and then maybe you guys can actively reach out to them. Tell them that, hey, we have this thing.
Sure.
And then people just remind them of the good times in HKUST, I guess.
Sounds good. Last question, how do you relax?
I don't relax a lot.
Don't relax. So work is your relax.
One thing is that I've given a lot of thoughts about this, on why I like to work.
Right.
Maybe it's helpful for some of the listeners is that one thing that I think about markets, I think about our industry is that there's no life or death situation. We're not doctors. We're not policemen, right? So a lot of things that we deal with, it's less stressful than life, actually.
For sure, yeah.
In life, you have, I don't know whether you have kids, you have kids. So, the birth of your child is stressful.
Yes.
And then being responsible to a life, to a human being, it's stressful.
Yes, for sure.
And then life, we deal with life, family members moving on and passing away and all these things. Those can be stressful. So if you think about it that way, financial industry is actually not that stressful. I like my job.
So, enjoy working.
Enjoy working.
Okay, great. Okay. So, and what was the name of the book that you recommend just now? I think...
it's Richard Kuhl's Pursuit Economy.
Pursuit Economy. Okay.
Yes.
Okay. Good. Thank you, Xian, for coming up today.
No problem at all.
Xian is based in Hong Kong. He works in macro research, and if anyone has interest, reaching out to him, I think you can be reached out on LinkedIn, right?
Sure. No problem.
Or if you want, we can always be a bridge to connect you to Xian as well. Okay. Thank you, everyone. I hope you enjoy this interview. Okay.
Thank you.
Bye-bye.